Good morning, everyone. Welcome, welcome. How's everyone doing? Welcome to our Fed Day, March 19th session from the Microefutures room, where we cut through all the double talk and gibberish to help regular folks earn a living in this crazy business. Our job is to bring you actionable, real time information and education so you can make good business decisions and manage your risk. Good to see everyone this morning. I'm good, Travis. I'm good. Okay. Oh, it works. Let's see. I downloaded Epic Pen. Finally got it to work. Hey, I'm listening, Raj. Good afternoon for those in the UK. Good morning for those of you who are joining us from the States. So, today is a Fed day. Okay, so there's an FOMC meeting at 2 o'clock Eastern Time. And I don't know, can you guys hear me? Nobody else is complaining, so check, check, check. Yep, thanks. Hey, Zeth, how you doing? So let's talk about our checklist. Now, if you look at the video that we did and put out this morning, I went step by step. I have a 5-step process, do the same thing every day, right? So if you do the same thing after every day, I'm not sure what are the habits people say they take X number of weeks for something to become a habit and you automatically do it. And we want to automatically do that when we look at a trade, when we get into a trade, when we get out of a trade, when we prepare for the day. The other thing that I've been working on is something called a market awareness checklist. Now, a lot of traders have a trade plan, and I've seen some of these daily trade plans. They look like plans that you're going to, building King Solomon's temple. Trade plan should be quick, should be less than half a page, right? Let's go through it. Where's the inventory right now? Well, overnight inventory is long. What does that mean? That means here's the close of yesterday, okay? And this is 70% plus a little bit of the inventory is above yesterday's close. So, okay, JJ, big deal. What does that mean? That means when the market opens, there's a inventory is the same thing as supply, right? So it's just another way of it's what we call it in the business. Like if you had a restaurant, you'd call it a storeroom. If you had a grocery store, you'd call it the back warehouse. It's where you store your stuff. Here it's time and volume traded over a level. So inventory is long. I'd say it's about, I don't know, 75, 80% long. So market profile folks said that there's a 60 to 70% chance that we have a move down to correct inventory. right? And if that doesn't happen, the market's trying to tell you, psst, psst, psst. It's trying to say, hey, there's some buying. Be careful. Because if the inventory doesn't correct lower, it means that there are buyers lining up. Because the sellers of that inventory who bought it here, you see, we had a liquidation yesterday. And we're taking this cheap stuff and we're trying to sell it higher. But we can't sell it too much higher today because of dun 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 Fed Day. Okay. I am on the June contract. I am listening. I rolled it 2 days ago. So if your contract is 50 points off, that's probably what it is. We have a very good video, if I do say so myself, sorry, right, on how to roll the contract. It's in the JJ video section of the Discord. So we're looking for a move down. Okay, let's also talk about market awareness. So it's a Fed day. Most people are on restricted margin. What does that mean? That means it costs $365 to trade a micro and $3,600 to trade a mini, right? So the cheap margin, that's gone because the brokerage firms are trying to cover their ass because we can't manage risk. So that's why that happens. Okay. So there's less, what does that mean? There's less follow through. That's why you get this chop. You see? See all that chop? Right? You get a nice move and then you get chop. And then you get a move and then you get chop. And then you get chop and chop and chop and chop. And one move that those moves are hard to grab, right? So that's the problem with a Fed day. After today and tomorrow, things will kind of get back to normal. Also, we have contract rollover. And what does that mean? That means that we are splitting the volume between two contracts. So here, look, the new contract has 190,000 contracts. The old one has 120. So there's still quite a bit of volume pumping through that old contract, right? That has to roll over into this. So we're splitting the volume between two products, right? So all of these things help us manage our expectations, right? And we alter our trading because now we are aware of the market conditions, right? Which is a fancy way of saying, hey, we know what's up. We are going to cool our jets, not trade as much, not get chopped up, wait for a good trade. What's a good trade? A good trade is when you get a trade from the edge, a look below and fail. Oh, that got really big. How'd they do that? Right? When you look below and fail, right? All of this crap, leave that alone, right? A look below and fail. And a harder one here because it's choppy, right? The problem with chop is you never know when your opportunity is going to come. And that is, as the young kids would say, the sucky part of this kind of price action, right? You get, there's a decent trade here. What's going on with my thing? Oh, right. There's a decent trade here. There's a decent trade here, but it's very few and far between, right? So just remember that when we're trading. Let's go look at our. So here's the close of yesterday. You could see all of the trading is above, right? Time and volume, and we're in distribution, right? So we've taken all the cheap product and we're distributing it at higher price. right? Just things to be aware of. Okay. Hey, Jam, what's up? So the first thing is the awareness. Okay, so we've gone through that. We know it's going to be not the greatest day before the Fed. The other thing is please don't try and trade the Fed move. You know, that's probably something that you don't want to do. I know I don't. Higher time frames. What would you like to know about higher time frames? What about them, Mr. Driver? How can I help? Higher time frame inventory, my friend, is still, if you're talking inventory, it's all still above us. Okay, good question. Well, higher time frame inventory is trapped long above 5860. The short-term time frame of the last 6 sessions is under 5704. We looked above 5704 and failed. So we still have liquidation because not everybody who's long up here sells at the same time. Get it? So what we're looking for is we are looking for inventory here. How can you have trapped inventory if it's rollover? Because some people roll over their short positions. I'm talking larger traders, Corey, not just us, right? And the reason I know that we have trapped inventory is when we get down or up to a certain place, we'll see resistance. So after 33 years in the business, right, and after doing this futures thing since 2012, I told you guys that when we got up over this level and we got to this area, that there would be trapped long selling down. And look what happened. So don't take my word for it. When I tell you that there'll be trapped longs or trapped shorts at a level, sit and watch the chart. If we get to that level and there's a reaction, then you know that inventory is trapped, right? So for example, if you're looking for trapped shorts, right? If you're looking at where trapped shorts are, well, trapped shorts are trapped short under here. That's why there was a low here, because there's a short position from 56.23 up to 56.60. That's why we have bids here yesterday. That's why we have bids here in the overnight. So when you get down there, if we get down there today, and those shorts who are bid to cover, if they see that there are sellers, they'll drop their bids. If they see there are no sellers, they'll move their bids up. It's pretty simple, right? You guys aren't used to thinking like this because you've never traded size, right? And when you trade size, you're very well aware of who is trapped where, right? One of the things that I used to do is orchestrate short squeezes. So I have a very intimate knowledge of where shorts would be trapped, whether it's done on purpose or whether it's done by natural market action and human behavior. Either way, the result is the same, right? If there's a bid, right? If there's a bid down there, for example, this W low, notice how it came and took the Q low by 2 ticks and then right back up. Why? Why would the price go to 56.75 and then move up off of it? Because there's buyers here, right? Now, who would the buyers be? Somebody looking to buy a huge position on a Fed day? Get real, right? Get real, my friends. No, it's a short cover. So you know the shorts are here. They're trapped. You get down to an area, they start to price compete and push the price up. The people who are long, net long, will start to lift the offer. It's business, ladies and gentlemen. It's commerce. That's why they call it a market. That's why it's not called the stock hot tub or the stock massage parlor, right? We are 82% long. Thank you, sir. Right. And my previous day closes, yeah, 69 and three quarters right here. I use the 5 p.m. close because I want to know where the inventory is at the end of the day. I am an inventory trader. And guess what? So are you. Even though you might be a fib trader, you might be a caramel macchiato trader, whatever the hell you're trading, you're an inventory trader, right? Because inventory is what's for sale in this particular market, and order flow is the flow of customers that come in to transact. It's really that simple. Okay. We structure our trades. Our trade setup is a repeatable business practice that is scalable in time and size. That business practice is also, how shall I say, it has the risk built in. So there's a business reason for a trade. So, for example, if I'm going long off of VWAP, right? I'm going long off of VWAP here, right? I'd put my stop underneath and put my sell orders here because I know their sellers are up here because that's what pushed the price down. Now, if the market breaks VWAP, should I stay in the trade? What was the business reason for my trade? The business reason for my trade is that there is no one who needs to sell under VWAP. So if somebody needs to sell under VWAP, if there's seller competition, why the hell would I be long? You feel me? Right? So if I'm long here because nobody needs to sell under here and they start selling under here, get the hell out of Dodge. Because I'm buying here thinking there's no supply and we're going to rotate higher so I can sell into it. Right? I know there are going to be sellers at these levels. Make sense, you guys? Hopefully. Don't worry, it just takes a little repetition. It's new to a lot of people, right? Because nobody ever actually tells you what's going on that's creating the chart. People love to come up with all sorts of gibberish to explain what's happening here, but it's accumulation and distribution of a product. This is a sales chart of ES futures. That's all it is. What about stops as sell orders? Well, so if you're long, you have your stop under that, under the stop here. Pretty much. I do use the DOM to execute my trades. I put my orders in using the DOM, right? And you don't need to worry about liquidity, Lewis, unless you're trading 1,000, 2,000, 400 contracts. If you're trading a couple of micros, what do you care about liquidity? That is another term. Look, there's a lot of terms that are, liquidity is the ability to transact size without adversely moving price. So if I have to sell 1 million shares of a stock and the stock only trades 5 million shares a day, it's going to take some work to do it. If I have to sell 1 million shares of the stock and the stock trades 120 million shares a day, makes my job a lot easier because the market can absorb the size. We are not trading size, so we shouldn't worry about high liquidity, right? And whatever you see on a DOM, those orders are just expressions of interest. They're not actually transacted business. And no size trader would ever show their hand. That would be suicidal. Okay. That's like sitting at a poker table and showing everybody your cards. Get it? Dark pools, swimming pools, movie stars. Right? Ugh. Right. So you guys have got all the buzzwords. Dark pools, liquidity. Next, somebody's going to say unfinished business, which means you need to go to the bathroom. Don't get sucked into all that stuff. Right? Don't get sucked into all this crap that's on Twitter and all these people are trying to get you to confuse you. Right? It's okay, Lewis. Don't worry. Neither is mine. Okay? I'm telling you, keep it simple. Right? What you want is to have a trade execution plan. Yeah, but that has nothing to do with you, Mr. Driver, right now. So I'm not going to talk about large orders that are hidden or should be hidden. What I want to talk about is how am I going to make you money, my friend? All that stuff is it's useless to you. So stop talking about it. I'm not trying to be rude. I'm just trying to say, listen, man, I want to make you money, right? I want you to trade and be successful. I want you to make some money instead of talking about swimming pools and dark pools and liquidity and you know what Mr. Powell had for breakfast and did he not finish his cornflakes? Is that a technical indicator? Just forget all that stuff. How are you going to make money? What is information that you can use that is usable, that is actionable, that puts money in your pocket, that keeps you from blowing up your account? That's what's important. People get sucked into all this stuff because they want the holy grail, the magic bullet, right? The Wheaties indicator. Do they still make Wheaties? If they do, they've had a good run. So, trades off the open. Okay. Now, the upper stops are here at 56.83 and change. The lower stops are 57.75. Okay. Yeah, man, I'm here. I'm here. I could talk about market making and I could talk about 15C 211s and I could talk about regulation SHO and I could talk about cross border clearing. I could talk about how to hide a short position in Switzerland for a year so nobody knows about it. Um, I could talk about, listing companies in different countries and arbitrage, but that is useless as you know what on a bull to you, the retail trader, right? So how are we going to make some money? Right here, I'm seeing bids at VWAP, right? So I see a little back and forth here. There's a position. That position, if we have the order flow, we'll try and take it and do this with it. Overnight inventory is long, so there's a good chance we could break. If we don't break, look for a trade once we clear the tops of these trees here, right? From 83 to 86 and then up, okay? Because here's the thing. When the market when the market is long inventory or short inventory, sometimes it goes in that direction at first to try and milk it for everything we have before we get the move down. Hey Petra, how are you? How's Arizona treating you this morning? Must be early there. That's your level, 5683. If we can clear that, will take this inventory and try and sell it here. Now there's going to be sellers here at 87.88. So that's the upside. Let's look at the downside. Okay. Still getting used to this Epic pen. Hang on. So downside, if we get underneath VWAP, your first target is 73.5. Hey, JR. Right. First target is 73.5. The stops are 77.25 and 75. Right. Yesterday's cost basis is down here at 70.25, 70.5. Expectations off the open, choppy. It's going to be choppy. So don't let them scam you. Okay. Take the obvious trades. Now, what does that mean, JJ? The obvious trades are when we do a look above and fail, or if we come down here and do a look below and fail. Okay? The look below and fail means that the sellers are complete under this level and will rotate back up. The look above and fail means that sellers are competing at 82 and pushing price down. You're welcome, Lewis. Thank you for watching. We appreciate it. I want to see where the sellers step in. I want to see where the seller steps in. You see how they're stepping in here? See, they were here, and then they moved lower and lower and lower. See that? Very simple. Right? So if we have sellers stepping in and coming in, if you're long, say you go long, right? When you get to this level, you can expect there to be competition. Did we take out the Globex low? We did. That was around, you must have been doing Uber service for mom. Oh no, I know you had stuff at home. So yeah, we had that poor low. It got taken out in M period, Raj. Okay, so now we're cleaning out those sellers. This is good to see. Okay, so we caught a bid. So overnight inventory is long, but what's going on? The price is going higher. Remember we said if the order flow exists, it is your duty as a wholesaler to milk it and move your inventory and get it out the door. You really got to remember this business is about taking inventory and selling it. You have to turn that inventory into cash. It's essential you turn the inventory into cash. So we got some buyers, right? Right? Eager beavers coming in the door, right? Order flow is just customers, right? So we held price steady over VWAP and that drew in some customers. Beautiful, right? Which allows people who are long here to lighten the load, right? Because that's what your job is to turn inventory into cash over and over and over again. So let's see if we stay above that level. The next place, see there were sellers right here and a standard deviation too. But look, these are the levels where there will be resistance because that's where the sellers are initiating. Now, this helps you manage in choppy markets. It's really good to know where the buyers and the sellers are because you can trade between them, right? We get a nice rotation going off the open, right? Now let's see if they get sparky, we'll try and take out that overnight high. If we take out that overnight high, right, there's really not much structure between the overnight high and the previous day high. There we go. We are open. Oh. I had put in a bid at 88 and a quarter and it ran away from me. You snooze, you lose. Now we're going to go find the bid on this backfill. See if we stay above the open. Look at the volume. It's all above the open. If you're doing a short here, right, your stop is the overnight high, right? And if you're a big spender, your stop is over that A low. Finding that they stopped selling at around 86. I'm seeing sellers at the open. So I'm short one at 87 and a half. I've got a bid in at 85 and I'm covered at 85. One contract. Right? This is inventory correcting lower. Hey, Smug Mug, how you doing? Right? Inventory is correcting lower. Now we have position here, right? As the Penguin would say, the position is here. So we should technically stop selling somewhere in this area here. See? And the offer lifts. See how the offer is lifting? It's all about inventory. If the inventory is here, that's this stuff here. You sell it down to the inventory, you stop selling, it'll bring buyers in. That's like going, hey, attention Walmart shoppers, right? For the next 3 seconds on aisle 17, we're selling, Jimmy Dean breakfast sausages 2 for 1, right? You were watching yesterday's stream? It's okay. I am listening. Have some coffee. I was like you this morning too. I had the crappy coffee. I used up all my good coffee and I didn't get any of the good coffee. So I was on the low octane coffee this morning. So I was missing trades like left and right. Got sellers at 89. Sellers at 89. Let's make this a little bigger. There is quite a bit of the Kmart blue light special. I miss Kmart. Getting over that overnight high. That's going to bring in some short covering, okay? And when we get back down to that overnight high, there should be some buying. There should be some bids as you drop into the 90s and the 89s. If there aren't, it means those short sellers have seen sellers, excuse me, right? If the shorts who are bid here, if they see sellers, they'll drop their bids down to 88. If they see that there's no supply, they will push price up looking to try and get some supply. So if you're buying this 89.90 area, where would you put your stop? Well, I would probably use the open, right? Because if it breaks the open, that trade kind of blows, right? I'm on the new contract, Lewis. I'm on the new contract, my friend. Right? So I took a little long here at 90 and I scratched it when it got under 89 down to 88 and a half. Okay? Did you get that, Lewis? We did a contract rollover, my friend. That's okay. That's a very common question. Rollover is a very confusing time, right? It's not something that, so oh, by the way, I stopped myself out on that. And now I'm just shorting my level of 86 and a quarter and covering at 83, right? So I took that long. I realized, oh crap, right? As soon as I saw it break, I was like, oh, right, don't get out of that, right? I was long right here at 90 and I stopped out at 88 and three quarters. Let me see. Yeah, 88 and three quarters. Right? Then I hit the 86 and then just covered down here. Right? So you use it takes that took me some time too, to use the information you get from getting stopped out, right? Yeah, and don't worry about asking questions, guys and ladies, right? That's why I'm here, right? I will steer you towards trades all the time or towards, if you ask questions, I'm always going to try and steer you into questions that you can actually make money from, right? Because here's the deal about this business. We're coming down. I think there's going to be some buying here between 79 and 80. Yeah, there it is right there, right? In this business, right, there's a business principle that guides finance, right? And there's a saying where I grew up in Saskatchewan. If you can't dazzle them with your brilliance, baffle them with your BS. And that is one of the founding principles of finance. So they keep puking all of this useless information on people, right? And they lose sight of what do I need to do to make money? You need to have a business plan that makes sense, and you have to have a risk management plan that makes sense, right? Look below and fail of 80, 82, right? You're looking at 84 and a quarter because there's going to be sellers right there, right? If it holds that, next seller will be just at the top of the next candle. Nice look below and fail, right? So I want to cut through that and take you to that's the trade that you want. This is all you got to focus on, right? When it goes from one color to another, look below, fail. You take it here, you put your stop here, use this as a target. Use this as your first target, second target. So long, stop. Target one, target two, right? And if you're a big shooter, target three, right? And when you do go long, put your sell orders in. So if you're long 10 contracts here, sell some here, sell some here, sell some here, sell some here. Sell on the way up. That's what professionals do, right? It'll add up. I had this old Italian client, and he would say, listen, kid, don't be greedy. A million here, a million there. It adds up, right? Yeah. Red light, green light, right, James? We wait until the sell orders complete themselves and the market shows you that the sell orders are done. So your risk is tight, right? So you're not out there on the raw and ragged edge having to use a 10-point stop. And sell into strength on Fed days, on days when we have any kind of chop. Sell into strength, my friends, right? Right? Take that inventory and turn it into cash, turn it into cash, turn it into cash. Because if you don't, your competitors will. You're not the only person who's long here. I try to buy on the bid and sell on the offer. That's how I was trained, Ross. That's not a dumb question at all. Right? We are trained in the business to buy on the bid, sell on the offer, and make the spread, right? Now, if the market is moving quick and I have high conviction on that trade, I'll hit the buy ask button. I never mark it in. There are two keys, or no, three keys that I never use on my DOM. One is buy market, sell market, and the other one is reverse. They might as well, that reverse key that they have on your trading software, they might as well just call that the let's screw you key button, right? Don't ever use that, right? So if the market's in motion, if it's fast, and I got to take the offer, I'll buy ask. But I like to just sit and put in a bid. Put in a bid, get hit on the bid. So as soon as my buy order executes, right, I put in my buy order, my stop. That's like automatic, right? It's like blowing your nose, right? You put in your order, you put in your stop, and as soon as it gets hit, put in your sell order, right? The CME order execution engine algorithm, whatever the fancy name they call it, is FIFO. First in, first out. So if you are long, put your sell orders in. Don't wait to put your sell orders in, right? That way, if the market runs up, it just takes you out. Less work. There's VWAP. Now I'm starting to get short biased. There, I said it out loud, right? And I think if we've trapped enough people up here, why does this pen size keep changing? Right? If we've trapped enough people up here, that'll make them start getting a little antsy, right? Push out a little bit. So I didn't get the best execution. I'm short one at 79, and I got a 77 and a quarter cover, and I just got hit. Next set of stops is 75. So if we accept under 77 and three quarters, then down. Zoom pen. Thanks, Sing. I just got this Epic pen to work today. I used to have what do we call it, Snag It, but it always gets in fights with Windows 11. What's going on in the room? You guys are very quiet. Is everyone short? Or are you just all waking up? That's the thing, about this 9 o'clock session. I've been up since, I don't know, 5 o'clock in the morning in the UK. It's 2 in the afternoon here. So like 1:45. So I'm all like, I'm all ready to go. And people are like, oh man, just let me have my coffee. It's okay, Travis. Wait wait till you see your setup, right? Just wait till you see your setup. Google. I never look at that stock. I mean, I've got a chart of it somewhere. Did I even have my equity charts open? Nope, I don't. Okay. How's the coin of bitterness this morning? 83,992. Oh, it's up $1,300. I'm waiting like a hungry dog for 72,000 in Bitcoin, but I haven't gotten there. And we're back above VWAP. So much for shorting under 77. Okay. Now, do we have another look below and fail of 82? Right? If it holds 82 and it takes out that seller at 83, look for 86. Okay? But wait, I'd wait until the next candle forms. Right? That's just me. Yeah. See? Now let's see if that candle can get us over 82. Right? Now there's a seller. See, there's that seller. Whoa, hello. Sheesh. What was that about? You guys awake now? Either that was news or somebody dropped an order, man. Because I saw the order book. I have the DOM open. I was sitting there trying to buy 83. And all of a sudden the order book just parted like the Red Sea. That's just one big order. That's like dropping a big, big stone in a very tiny puddle of water. That's what happens. Well, isn't that special? Now we've got some people short under 88, 86, that's for sure. See if we can get some momentum higher. We got to hold that overnight high. Remember the overnight high. If we can't hold the overnight high, this is just going to retrace. The look above and fail? Sure, that's when we do this. When we look above and fail. So we look above 56.99, come back under it, you'd be shorting 98, 97, stop above 99, and be covering a little bit here, in the lower levels. I'm just scalp long 90 on 3 contracts, and I'm selling them. Out one at 94, out one at 94 and a half. Got one left, 94 and a quarter. I'm gone. So when you're doing the look above and fail, you're waiting for sellers to compete. So you want to hit that. You don't want to sell this. Don't hit the front end. See, right now we're in the front end of the move. Let that front end clean itself out. Right? The only reason I was buying is because I saw bids here, and the position is underneath us. Once the position is underneath us, we are going to go and try and milk people into buying it, right? Because that's what you do in commerce, right? You want to try and take that. Remember Seinfeld? Bad lighting and cheap fabric. That's how you move product, right? Yeah, this market, it's going to be something else. I'll post this chart in the room. Here's a 5-minute candle wax chart, guys. Can you guys see the position all the way going back from yesterday around 10 o'clock my time? right? When the market dropped down, look at where we are now, and that position is really quite a bit underneath us. It's underneath 56.75. So we're in some nice distribution here. Hey, Christian, how are you? And now, time to put the DOM away for a bit. Am I on sim? Yes, put it on sim and drop the DOM. I like chop. Chop is just a negotiation, right? Chop reminds me of when I was a kid. We'd go to the car dealership. My dad would go, "How much is the car?" The guy would go, 30 grand, and my dad would go, "I'll give you five." I'm like, "Oh, Jesus. We're here all day." Right? That's chop. Oh. Okay, what's next? Can we get back down to that 56.89? It's a 5-minute candle, says you. I use the 1-minute candle. That's just for reference. So think of these charts as maps, right? So for me, the TPO chart, right? This is a map of the city. The 5-minute chart is a map of an area. And then the 1-minute chart is the map of the neighborhood I'm in. Make sense? Can I trade chop? If it's tradable, yeah. That's a great question. You can trade chop. You have to have a method for trading chop. You have to have a risk plan for trading chop. And you also have to understand, JR, some chop is not tradable. If you've got chop of, 4 to 6 handles, 4 to 6 points, that's tradable. But if you've got chop of like 6 ticks, that's not tradable. That is wholesale business. That's not for retail. Does that make sense? Some chop you can conduct business in, and in some chop you can't because it's a wholesale business. Like what's going on right here. This is a great example of that, right? So this is wholesale business because wholesalers can buy they can buy under 92 and flip to the offer and sell 93, 94, 95, right? And then when it comes back down, they can buy it again, right? We don't do business like that because our commissions are too high, right? So that little price stability brought in buyers. That's when you line up people outside the club. Everybody thinks it's a hot club. Now they're coming in, right? And you can raise prices. 56.99 is the target. Now, if we break over 56.99, you just double the profit zone again. That's all you got to do. So you go 2, 4, 8, 16, right? Very simple. Why do you do this? Well, it gives you targets, number one, right? The other thing it does is it helps you manage your expectations. Should I be buying at 16 times cost basis? What do I really expect to happen? Or should I be waiting for a short? 8, right? So this is math even I can do. Chop is wholesale business. See, now here I love to get the market to backfill to 5,700 so you can get long because I don't like to chase price. So I like to see if it backfills. What I'd love is if we do a look above and fail and then come back up, and then I could take a long. But right here, I don't know what kind of order flow is going to hit me. So I just won't. This is where those, what do you guys call it? Shlomo? YOLO, not Shlomo. YOLO long, right? That's what you guys do if you bought this right here. I like it for it to come back down and then come back up. That's the look below and fail of 56.99. So I know that the sellers are done, right? FOMO, Shlomo, whatever you guys have a lot of terms, right? Retail traders have a lot of terms, a lot of sayings. In institutional trading, there are two questions. What was the volume? 20 million shares. How much did I sell? 4 million. Okay, see you tomorrow. Yeah, no kidding, Christian. I hate this kind of price action. This slow, creepy price action, because what this does, if the position is underneath us, a lot of people will go, oh, it looks weak, I should short it, right? And do you guys notice in this market, just when everybody gets short, the thing jumps 30, 40 points? Don't mistake this slow, creepy for weakness. Ah, welcome, my friend from Slovenia. The lines are what we call balance zones. And in our Microefutures room, we have lots of videos on how to do it. If you look at the video prior to this one, the one from this morning on my YouTube page, it's this blue balance, right? While these guys are selling paper up here, let's go and find out where I made that balance zone. It was from, it was from here, right? I used this balance zone from here. And the other thing I did was to confirm it, I drew a volume profile. See that big chunk of volume? That's the position. So that was the balance zone. And what I do to find balance is I look for selling on both sides, two-sided trade. So I'll look for a high and a low. And when we look below that low, we'll go right back to that high. It's really simple. I've got a ton of YouTube videos on it. And if you come into our Microefutures room, it is the basis of everything because it just tells us where the product is priced, where our profit zones are, and where our discount zones are, right? Because pretend this was a chart of apples or oranges or, I don't know, spices, whatever you're selling, right? This is just a sales chart. This is a 1 minute sales chart. This is a half an hour sales chart. So now, do I want to short this? Of course I want to short this, right? Everybody wants to short everything. I won't short it until it gets underneath 56.99 and shows me that the sellers are desperate and they're going to lower price. Right here, they're just messing with you. I don't mind if I miss the high. I let somebody else tag the high, right? That's fine. I see the offer moving lower. So this is a look above. Does it fail? If it fails, it comes under here and it won't be able to offer above. That way you can take a short and actually see how it came here? Tagged it and came right back, right? Frustrating. Wait until it offers under 99. Because if it can't offer under 99, there's no reason for you to be short. That is actually looking like a look below and fail of 99. Let's see what happens. I'll give it another candle. See? I always like to wait and give it another candle. And if I do go long, I'm long one at 1.25, right? And I've got an offer at 2.75, and I'm going to move it down to 2.5, and I'm out at 2.5. I'm just scalping just to see. And also, I haven't really traded this contract. It's a new contract. So I'll scalp around and I'll poke around, and that's what I do. Because I really hate losing money unnecessarily. That's just me. My parents were not Rockefellers, right? So that was a little look below and fail, just a small one, right? Look below. I took the long, had my stop under here, and I sold into that strength, right? The strength is created when supply runs out. When those sell orders are completed and the market runs out of supply, the strength is created by the offer lifting and the buyers following higher. And you want to sell into that. Because if they sold here, they are most likely to sell again. So by not doing business in the middle, you keep yourself from getting stopped out a lot. Is it at 2 o'clock or is it at noon? Oh, for you? Oh, that's right. You're in BC. Fed. 2 p.m. Eastern time. What time is it? 10 o'clock in New York right now. Oh, boy. Here we go. Now, longer term, what's going on here? This is kind of interesting. Everyone's wondering whether this was the bottom. I don't know if it will be. All I do know is this inventory, we're going to try and take it and sell it up over 5704, hopefully before the Fed. Do you know what I mean? Like if you were long, okay, let's say if you were long here, right? If you were long underneath 5670, right? Wouldn't you, right? If you're long inventory, wouldn't you want to get rid of that inventory and turn it into some cash before the Fed? Do I ever trail a position or try and turn a scalp into a longer target? Not really. If I'm fully dialed in, Dan, if I'm not on talking to people and being distracted, and I can sit and trade, right? Just turn everything off, put the cell phone in a different room, right? I like to hold trades longer. In this market, I find I don't really have the desire because I can trade 3 to 5, 5 to 10 E-minis and just pay my daily, right? Say you make 4 points on 3 to 5 E-minis, right? You're making an okay living. You know, it's good supplemental income. Does that make sense? I don't like the drama. And because I do a lot of one-on-one coaching and that kind of thing, I don't really have time to sit and really zone in. And I'm a guy, I can't, when it comes to retail trading, I can't talk to three people at the same time, coach someone, trade my account. I like to be dialed in. If I'm selling stock, if I'm making a market, I can do anything, right? I've made simultaneous markets off of three Blackberries sitting at Starbucks, but I'm in control of the supply. Here, I have no control at all, so I better be zoned in. So I just like to get in and out. Does that make sense? That's just me. Now, I'm not saying you should trade exactly like me. You can definitely use these levels to hold trades. So say you have a longer time frame, right? And say you bought, right? It's completely cool. This method of trading is um, you know, is adaptable. So say you're a big shooter, right? And you buy 20 here, right? You're long 20 contracts here, right? You could sell 5 here. You could sell 5 here. You could sell 5 here. Now, what you should do is you should put your orders in the system so as the market goes up, it'll take you out. And guess what? If it doesn't execute your order, you know somebody's front running you and you can hit the bids and get out, right? So if somebody is trying to scoop your customers, right, you can get out of the trade. That's why if you buy 20 contracts here, put your 5 there, you sold 5, right? And then I would front run this level. I'd put in another 5 or maybe 8 here, right? So you're out, right? And then stagger them, right? And if the market keeps going, then that's great. If the market doesn't execute your sell orders, that means somebody is selling and undercutting you. So if somebody's undercutting you, right, get out of the trade, right? Undercut them. Make sense? So on retracement, market profile people, that's where the bids should be at 57.05 because when B period took that A high, that's where the shorts are going to be trapped. There's yesterday's high. Did I label that right? Please tell me I labeled it. I did. Okay. So let's see if we get a nice big stop run. We got 2 ticks. They're selling into it right there. I wasn't thinking that we're going to get this. Where's our next set of stops? Wow, our next set of stops are all the way up here. Up to 57.34. Wow. Okay. So structurally, let's see what comes in now. So remember, if you are going long, this is the 8-time profit zone of where the inventory is. Let me bring this chart over. This is a 5-minute candle wax chart, and this is what I was talking about. Do you folks see that the inventory is here, right? That's what you guys call a high volume lymph node or whatever, right? That's the position. This is when we put it on sale, right? Then back up, back down, position, position. We are in distribution of that position. But if you scroll up on this puppy, you will see that if I drag this volume profile out this way, right, we'll start seeing a little resistance somewhere in these areas, like right here. Oh, look at that. There it is, right? See, there's a chunk of volume here. So you're going to have inventory in the shelves. So that's why we hit that and we stopped. It's pretty cool, right? It gives you practical information, right? So that's our 5-minute chart. Same thing. Position, sell the position, right? And we've got some good short covering coming in today because of contract rollover, right? Old business, new business. So if you're long, that's beautiful. Any questions? Just use the levels. Okay, so if it holds over 11 and three quarters, remember, if you are going long up at these levels, right, you are going long at the highs of a cost basis, right? This is now we are in the 8-time profit zone. So if you buy it here or if you're buying it here, where should you be expecting to sell it? Right? It's like buying a car at the top of the auction, right? Make sense? Now, just because you can't buy it and make a lot of money means don't automatically go and short it. Hope that makes sense. Questions? No? Clear? This is it's actually good that this is happening because the wholesalers can get rid of that position that we were talking about before the Fed, right? It's always good before a big risk event to turn your inventory into cash. Does that make sense? Why is that good? Because, okay, Zazu, close your eyes, right? Well, it gives you an expectation of what's going on, right? So you're not just blindly buying it up here and chasing price, right? So if you know that they are selling into this, you don't want to be going long at 8 times the price that they bought it at. You know what I mean? Now, it doesn't mean automatically short it, but it means don't just blindly go long because you're buying it. We're all like, that's where they're like unloading it, right? They're just unloading it quietly so they don't scare you away. So they sell gently. Listen, your father was the best mattress salesman out there, Bahar. That guy could sell ice to an Eskimo. You got to remember, I used to sit next to your father and listen to him pitch. That dude was so slick. People would buy 100,000 shares, they wouldn't even know that they were buying it. Damn, I'm long. Oh, okay. He would practice his pitches when he drove, right? I'm serious. His dad is a hell of a salesman, man. He'll sell you something you don't even know you bought it, and you'll feel good about it. What was his famous line? What's holding you back? What's holding you back? What's holding you back? You have not taken a position yet. Well, what's holding you back? See, Elliot, That's good. The objections, but we're not here to learn how to sell. We're here to learn how to trade. So let me get back to it. So we did a look below and above and fail of yesterday's high. So if you're shorting this little backfill, I didn't call it out because I wasn't on the ball enough. I apologize. Should have been short 10 and a half against 11 and a half. But where are the bids, right? They stopped selling right here at 9. We need them to sell it lower than 9. And if you were a larger trader and you were short 10 and a half against that, if it took out, if it, sorry, not 9, if it took out this 6 area and held underneath, you'd be looking for 4 and 5. So we have not had any significant inventory correction. So those of you who are short from the 10 and a half area, right? See, we came right there, tagged it. Whoop, where is it? Right there. If you're short there, there's going to be some bids here. So let's see. Under six. You should be covering somewhere in here. Put your buy orders in already. And if though they don't get hit, just go grab the offer and pay yourself. Right? Everyone else is getting paid. You should get paid too. Okay. There's no reason to not pay yourself in a market where everyone else is getting paid. These guys are getting paid. Right? Get paid. You can hold trades later. You can do fancy stuff. It's like learning how to ride a bike, right? Like I grew up in the 70s, right? So there were some kids, who could jump like, they'd jump a bunch of barrels on their bicycle. They'd built a ramp. But, if you've just learned how to ride a bicycle, maybe you shouldn't do that just yet. Maybe like try and go around the block without crashing into a tree. Feel me? Trading is still a physical skill, right? That hand-eye coordination, training yourself to get in, to take, to cut contracts automatically. If you're trading size, and it gets out, and if it hits one of your warning levels, right? Say you were long biased and you're building a long position here. Well, that's your out. And if you get under 7.25, you start cutting contracts. But you have to do that automatically, right? You can't hesitate, because if you hesitate, the longer you hesitate, the more money you lose. So we have to train ourselves, right? We have to train ourselves to get out of a bad situation before it gets really bad. And it's okay to talk about 2-to-1 risk management and all of that stuff, but the bid is at 57.06. If we lose that bid, there is no reason for you to be long, right? And the sellers are here at 57.09. So if we start offering over that, be careful if you're short, because that's your risk is 10 and a half. What's the best way to see bids from shorts? Great question. When the offer comes down, Italian trader, check this out. Okay. when the offer moves lower, when it stops and reverses that red line, you see the red line on my screen? I'll try and make this as big as possible. See the red line? When it moves lower, and then it'll come down to a point where it looks like it sat on a tack and then it just jumps up. That's when it's seen a bid. Bid is there. So the seller comes down and then they see a size buyer and they're like, oh, let's raise price, right? Think of the seller as like this weasel, right? One of those guys, who sells Rolexes outside the Empire State Building, right? Fake Rolexes, right? As soon as he sees a busload of tourists, the price go up, right? If there's no tourists, he has to lower price to capture those people who want to buy. So just watch the offer. What is a level 3 quote? A level 3 quote is if you have a NASDAQ workstation and you're a market maker, you can enter level 3 quotes. It doesn't really apply in futures. Level 2 is when you can see the bid ask. Total view is when you can see everything. Level 3 is actually having access to a NASDAQ trader workstation. Just watch the offer. I know it's boring, Italian trader, but just watch the offer. It'll train yourself, right, to see when the offer comes lower, it's going to offer into the buyer. The offer, excuse me. It's dry in here. Forgive me. The offer is the lowest price they're willing to sell. So if you show up and you're selling 5 and Raj is at 5, I'll go 495 because I want to capture that buying. But if there's tons of buyers, then we can all sell higher. I do not watch the bid at all. I watch the offer. The bid are the suckers. The offer is the smart money. No, Aaron, those questions are like 1990. People talk about all that stuff, market makers seeing the stops and all of that, and it actually doesn't help them make any money trading. That's like all old information. You can actually tell where the stops are here by looking at the bottom of a half-hour candle. Very simple. Everybody has pretty much the same information. Market makers pay for order flow. So they, but they have to provide liquidity. Anyway, getting back to what's going to make you money is watching that offer. So when you're short and the offer starts to lift, pay attention, right? If you're long and the offer starts to move down, pay attention. Right? Retail trading, it's so easy to get people distracted, right? Talk about market makers, talk about dark pools, talk about all this software that helps you find liquidity. Listen, that's all great, but it's not going to make you any money, right? What's going to make you money is knowing when to trade, when not to trade. And when you get into a trade, what is the business reason for the trade to work, right? So if I'm long, the business reason is that we're out of supply underneath 5709. And the market is rotating up looking for sellers. So if I'm long 8 or 9, I'm going to be a seller, right? If I see it breaking 9, the business reason for the trade starts to go away, right? Simple. Does everybody get that? That's why your stop would be there. Because if the business reason for the trade is that all of the supply under 9 is owned, where we can take it and sell it higher, if someone's selling under 9, that kind of wipes out your plan. This is how you can stay out of, bad trades. If you understand why a trade occurs, right? And say you're a chart trader and you trade like, you got your head and shoulders, Selson blue, upside down, hanging shoe, whatever pattern you're trading. If you understand the business that creates the pattern, then you're going to trade it much better, right? If you understand why it's happening, and I tell you, the most wicked, evil thing people do is tell traders that this is random, right? If you think this is random, poof, I can sell you anything, right? You put $1 billion on the table, do you think anything is random? Like, seriously, keep it simple, and that's what we teach in our Microefutures room. We want you guys to have information you can use so you don't trade at the wrong time, so you're not losing money, right? What is the information that market profile tells me? Well, it tells me where the cost basis is. It tells me where the inventory is priced, right? What is the information that these 1-minute charts tell me? They tell me on a 1-minute level where the sellers stop selling and where they initiate. This is called a rotation, right? Beautiful stuff. The information that a 1-minute candle chart, that a simple candle chart tells you is just amazing if you know what to look for, right? Yeah, I preach a lot. It's unfortunate. I'm preaching a lot this week because I get a lot of people in distress, that are either losing money or can't figure it out because it's a tough week. You got a Fed meeting today, you got contract rollover, right? It's just, it gives you unpredictable order flow, right? It gives you chop, higher margins, so, and people need repetition. It's the only way to get through this business. You got to repeat this stuff over and over again. There's a nice rotation there. And let's see if we can just go back and forth and back and forth. You know. Now, if we do this, do we come back? Do we look below and then come back? That's a good question. I have no clue. I have no clue what's going to happen when the Fed speaks. I really don't. I have a problem with bias. So you'll hear me say I don't know a lot because when I first started trading futures, I was always short biased, right? Which didn't really work out a lot because in market making, you're like, I'll sell two, I'll sell two, I'll sell two, that'll drop, I can cover. Next thing you know, you're short 10 contracts and it's not dropping. You're like, whoa, right? So I have a problem with bias. So what I do is I just let the market tell me. And because I don't trade when the Fed decision comes out, um, I'll leave that to the Red Bull crowd. No, I do not use hotkeys at all. You're asking a lot of equity questions. A lot of equity traders like hotkeys and level two and all of that stuff. But no, I only, I don't take that many trades. I just click my orders in on the DOM, right? I can tell you're an equity guy, right? That's okay. right? Those hotkeys. God bless those hotkeys. Those hotkeys have paid. Those hotkeys paid for my Jag. Traders just overtrade. They're like click, 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 and I'm like, yeah, I've sold you 1,000,000 shares. Thanks for coming out. Right? Be careful with that stuff. Right? Oh, level 2, great, beautiful. Right? Come, little lamb. When do I consider it range bound? When it's trading inside the previous day's range, Dan. Once it breaks out of the previous day's range to the high or the low, then we're starting the trend. And when we start the trend, do enough people come and follow? And that's it for me. It went quick this morning. Thanks, everyone. Now remember, be safe out there, right? Don't get too big for your britches, right? Remember, it's all about risk. Have a great morning. Stay out of trouble. Come visit us in the Microefutures room. We have a 7-day free trial. I promise you, you'll learn more in 7 days than you will anywhere else. You will anywhere else. And have a wonderful, wonderful day. And remember, do not take candy from strange market makers. Thanks, everyone. Thanks for being with me. Bye for now.